What's up, everybody? Welcome back to another episode of JOS Just Our Stories podcast. We're on episode 6 today, and we're going to be talking about stonks, all our favorite topics this week. So if you haven't heard about GME, WSB, and all these other things, and you're wondering what on earth these acronyms mean, this is the perfect episode for you. There's no get-rich-quick scams or schemes here, but hopefully we'll try to cover it the best to our abilities. So today we have a guest, Shajaat, who's joining us.
Yo, what's up?
And then we also have Saif, who's a return guest.
Hey guys.
And then you also have Fariha joining us today as well.
Hello.
So yeah, welcome everybody. Thank you for, making the time and talking about our favorite topic. Let's start with the basics. Just one by one, tell us a little bit about how you got interested in the stock markets. You can keep it as short and sweet or long as you can. You don't got to tell us all your positions or anything like that. Just how did you get interested in the markets? What got you into like investing or trading or whatever?
So I got into stocks by talking to my friends, really. Like during Corona, I really didn't have much else to do. And he's like, instead of letting your stimulus money rot away in your TD account, work for you and make money for you so you can make more money. It's pretty much it, and rest is history. Now I'm addicted.
Nice. The stimmy checks. Very nice.
All day, bro.
Okay, Saif or Fariha?
Yeah, I can go. For me, my dad's been invested, not in the Canadian markets, but he's been he's talked about stocks throughout my life. I don't think I really knew what that meant until maybe grade 11. I took a econ class and I got to participate in a little mock stock game, basically with everyone in Ontario or Canada or something like that. And I found that really fun and engaging, and so that was always in the back of my mind. And then once I had enough money that I felt like I could, put towards something that's not going towards my main daily expenses or monthly expenses, I just started investing maybe in March. I think that's a time when a lot of people started investing. March was 2020 when quarantine.
Wait, did you invest during the dip?
During the dip, yeah.
Oof, that's a yikes.
That timing.
During the dip, as in March, when everything was going down.
Every stock went down. That
Yeah.
isn't Zoom.
Yeah. So that's literally when I put it in because I kind of felt safe because everything was basically at a discount. And yeah.
And then you saw the first big red day and you're like, oh, what have I done?
I haven't seen any major issues so far, so no.
Okay.
I think she bought it after the dip.
Yeah, after everything's gone down. So I bought everything at a discount, basically.
Honestly, it's really hard to time when the dip's gonna end, right? So
That's fair, yeah.
during times like those, it's uncertainty really rules. It's people are just gonna panic sell if they see constant. The deadliest dips always is the slow ones, the ones where you lose 4% a day, and then you see a small glimmer of hope where you go up maybe 4 or 5%, and then you just go straight down over and over. Those are the deadliest ones. I'd rather lose 20% in one day than 5% over time. It's there's a huge psychological factor that plays into investing.
There's also a term for it. They call it the dead cat bounce. But yeah, definitely. Fariha, do you remember the first stock you bought on your simulation when you got started?
Yeah, I do, because it's stock that I was watching since it was one of the stocks that I fake invested in grade 11, and I was keeping track of it, and it was doing very well, and from my research up till that point, it was also expected to do okay. So that, I think it was a US stock on the NYC. So
yeah,
it's still doing good. It's still doing good, and grade 11.
Do you guys
got lucky with that?
Do you guys paper trade?
She started with paper, right? And now she's I think in the actual money trading. So everybody here is in the money. On that point, I just wanted to throw in, I don't know how I forgot this in the intro. Nothing we're saying here is financial advice. If you're listening, this is not a recommendation to buy or sell anything. You gotta do your own due diligence, and we like the stock.
We like stock.
Last but not least, Saif. I don't think he's paper trading either. Do you want to jump in and quickly tell us how you got involved?
Yeah, my major was economics in university. So around then, I kind of heard about the whole stock market situation. I was never really interested, to be completely honest. I don't really enjoy looking at or like learning about finance instruments or like looking at stocks and doing analysis and going forward there. So when it came down to when I was working, I had heard about the sentiment of like putting some money aside so your money can grow better than a savings account. So I just did mostly autopilot investing, mostly through Wealthsimple. And that was a great happy medium for me because it's very hands-off. Yet I could still essentially partake in the stock market. So that's how I got started. It's only the most recent movements that made me a little bit more aware about certain stocks and timings and when to buy and actually participate with individual stocks. I remember growing up reading like most people investing in individual stocks don't actually make too much money to begin with. So I didn't really dive down deep into it till recently.
I'll ask you guys a question. Like during this past week, how many hours did you spend looking at the screen, watching like the price? Way too much for me. Way too much. I would wake up at like 8:30 in the morning just to see like the pre-market action. And
Bro, you're dedicated. Yeah.
No, it was complete degeneracy. It's like, oh man, I was like tracking that stuff like a hawk. But I made a lot of money this week, like a lot.
That's so it's good. I'll go on that. So initially, some long time ago, not that old, but I used to trade, still like follow the price in the morning, wake up early and all that. Since then, I've gone more like Saif. It's more lazy, less involved. But this last week, it's more than the tickers. I'm just following the news and like the actual social media and what's happening. And on that point, I want to touch on like, where are you guys getting the news? Because they're all millennials and whatnot. But where are you guys getting the news? Which social medias are you following? And what's the vibe like on those platforms?
I would say my number one source right now is Tahmid on Messenger. You're covering
that one's always number one. Right? That one's gonna be really hard to read.
Tahmid like just gives me the cream of the crop, like what I need to know the most.
Yeah.
And he covers
the rest of it's just fake news.
Yeah, exactly. It's only matters.
No, he has some.
But Twitter is more on like the meme side, so I'm seeing Twitter's reaction, but it's not like I don't take any of that as like news. I'm just there for the content.
Do you type in like the hashtags and then follow that hashtag?
I don't even need to. It just shows up.
What's trending right now? What's up on the big trending list?
At the moment, nothing related to stocks on my tailored ones.
Okay.
Yeah, for like the past week, though, it's been like random names would pop up and down. It's pretty interesting how much it's taken over.
Nice. What are the rest of y'all on?
For me, I follow a lot of Twitter. My friend has like this app that tracks like all the tickers, like Nokia, BlackBerry, AMC, GME. Like he has this app where every time someone tweets about it and uses the dollar, like the ticker, it shows up. So based on that, we see like how much sentiment each stock has. And if we see like GME's one, for example, it's like, oh, the tweets are coming so quickly you can't even read all of them. And for a couple of the other ones like BlackBerry, it's like quieter. In terms of like raw fundamentals and stuff, I usually look at Reddit or I do my own research. But
Reddit for fundamentals. That's like mic drop. Who would have thought, right? Would be going to Reddit for fundamentals.
Well, I don't use like Wall Street bets. Well, prior to this week, I didn't really use Wall Street bets for like serious financial advice. I would like, if I want to look at like good stocks, growth stocks, I would go to like investing r/stocks, stuff like that, where you can get like actual good fundamental analyses. Either that, or I would search up the stocks myself. I would look at PE ratios. I would look at their 15-day averages. I usually make short plays based on 15-day averages. So if it falls below that, I'll be like, maybe this is a good time to buy in because it just dipped. So it likely means the price action will go up. But for stuff like this, you can never predict it. Like, this was unpredictable. It's unforeseen. Unless you were following deep fucking value. Keys said there was going to be a short squeeze on GME. We didn't know exactly when, but it was going to happen. And this thing was going to skyrocket because GME was by and far the most shorted stock next to AMC.
Right. I have another question for the part about WSB and GME, so let's save that thought for that next question that's coming. But yeah, no, I like how it's a mixture of using social media for technical and fundamentals, and that's the time we're living in.
Normally I would advocate heavily to like paper trade. If you're a beginner, yes, do paper trading, but it will not let you anticipate these types of events. Paper trading follows fundamentals. It follows technical analysis, and it gauges price action based on that analyses. It can never predict real life events like COVID. It would never have predicted that dip. People's sentiment, it would have never predicted that. So sometimes keep an eye out on the news. Otherwise, paper trading is solid.
Yeah, and just for the people listening to this who have no idea what stonks are, very quickly, technical is when you look at price action and charts to determine direction or try to predict, and fundamentals looking at the actual underlying business that these stocks represent. So it's two different approaches, and there's no right or wrong answers. Some people, they mix them up. So just so you know the terminology real quick. Saif, did you want to come in about what you're following? Anyone that we missed? Are you a TikToker?
Not a TikToker right now, but for me personally, like I was always a big user of Reddit. Even like I think I started using Reddit like 5 years ago. So I've been using Reddit extensively for news way before any of this even happened. So that was actually one of my primary sources for sure. Outside of that, I think primary is like brand names. Yahoo Finance is always a great one because they just have it very simple for certain stocks if you'd like to go take a look at it. Now, just for quick context, like most of my investments, like everything I do is all in crypto. So I follow mostly different, I'm still using Reddit, but I'm using a different medium of apps and sources to get my knowledge because I'm still kind of new to the whole stock market.
Are you in like 100% crypto or what?
Yeah, I'm 100% basically crypto.
So
or I guess 95 to 99.
No stocks, right?
Basically no stocks now, yeah.
Okay.
Is in the underworld.
I don't know. I think crypto is good. It's just that crypto is something that will really take off in like the next 20 years, 10, 20 years. Because I fully do believe the US dollar will become worthless in the long run. Because of all the inflation that's going on, yes, the US dollar will be worthless. It will be worth nothing because everyone will have like millions of dollars. Therefore, it'll be like the Zimbabwean effect where millions of dollars really means nothing in the long run because everyone has millions.
Yeah, but the only thing is it's a matter of how long that would take and what historical inflation rates end up in. So,
the good thing about crypto and Bitcoin is that it's decentralized, but most importantly, there's a finite amount of Bitcoin that's in circulation. With the US dollar, they can just print money nonstop. Money machine go burr, people get their US dollars.
Right. No, it is fascinating, and that's a lot of, I think, Saif, what you hear in the crypto circles as well, and its advantages.
Yeah, I'm definitely like this is a very long-term investment, and like my term here is around 10 years. So I looked at it till 2030 is my hold.
Yeah, before you become a boomer.
I lose all my money and I come here for advice stuff.
True. I want to come back to the point because my guy said money printers go burr. So do you guys think there's going to be a fundamental shift because sort of becoming a movement, what's happening, and we'll get to what's happening with WSB and GME on the next question. But I want to ask more theoretically, do you guys think, because I know it changed the way I think for a bit, at least a little bit, but do you think there will be more focus on meme stocks and meme investing, to call it that, and just the how we approach our portfolios and what we look at? Do you think this is a historical moment where mindsets change, portfolios change, or it's just a moment passing?
I think there will be a lot more interest in the stock market now that people know that this is like anyone can get into it. It's become a lot more mainstream because of what's happening right now. But in the long run, you do have to follow fundamentals. You can't just say any meme stock is going to go to the moon. It has to follow fundamentals. With GME, this is a very special case. Like I said, this is the most heavily shorted stock of all time. No other stock has that property. So if you were looking to short squeeze another stock, forget about it. You have to do DD, due diligence, all the time.
Yeah.
This
Very quickly, just for people who don't know what's happening, can you explain what GME is, what it stands for, and what the short squeeze is, like the very watered down version?
So GME is GameStop, which is a company that's been performing poorly for like the better part of like 2 to 3 years, if not longer. I actually looked at its chart yesterday because I was talking to another friend about it. Yeah, they've been performing poorly for like the better part of last decade. So because of that, the hedge funds, they're like, oh, this is free money. You short GME, you get free money because they're always performing poorly. This is also a stock that's like done garbage for their earnings, despite it being COVID, where everyone's at home playing video games. GME is suffering in that climate. So
right,
under normal circumstances, I would have shorted the stock. I would have said, yeah, this stock is not good at all. But people have done their due diligence, especially D-fucking value. He did his due diligence. He showed us this information. He made it available to everyone in the public. He's like, yeah, all these hedge funds are shorting GME. If we all banded together and bought the stock, we can make these guys pay for their short positions. If the price goes up, they lose a lot of money. Therefore, they're going to have to pay us out.
Right. And yeah, that's literally the battle that's being fought out right now. Yeah. And the icing on the cake is it's a Reddit subreddit that really brought attention. And their hero DFB, as my guy is saying, that brought attention to this once-in-a-generation opportunity that Wall Street Bets is, telling everyone about. And now the whole world, somehow, due to media attention, other social medias, now the whole world is looking at it. And suddenly, we came for the memes, but somehow we ended up in a sort of a social movement. And I want to touch on that point. If for those of you, you're following Twitter, you're following whatever you guys are on, do you think that this has lasting power as a sort of social movement and, going against the hedges and just creating change that Wall Street Bets really seems to want to do out of this opportunity?
I do think it's definitely, there's going to be a lot more eyeballs looking at the stock market moving forward, mainly because of a lot of these gains that are kind of happening from very select few people. That's going to grab a lot of attention. So I think that's going to keep happening. The second thing is I do think it might be a movement shift. It's kind of hard to say. I think more in-tune investors will pay closer attention to certain stocks that they're even invested in. And I think moving forward, it's going to be a bit of a change than what we've seen with the stock market before.
Yeah. And what do you guys think the actual changes might result in? Is it regulation? Is it something else? Is it just more meme stocks being a bigger portion of portfolio? Or just the way we approach valuations where fundamentals isn't as important as before?
I think if anything, trends will become a lot more transparent. I don't think it'll play like a heavy part in influencing prices because, like I said, there are still fundamental factors that are in place that need to be played out. You can't just like pump any stock up and then dump it, right? Most people, I fully believe, do not have the time investment nor the attention span to like keep this up constantly.
Right.
That's the truth. GME is a very rare opportunity where everyone's caught on, but if you try to do this with like any other stock in the near future, you better have good fundamentals to justify why it's going to go up. Otherwise, people aren't going to follow it. People aren't as stupid as we thought. Like that's what happened to the hedge funds. They underestimated us, and now they're getting bit in the ass for it.
Yeah, and it's interesting to see because the whole narrative now is like it's the internet versus these hedge funds who shorted GME or shorting other names, and it's become like a personal issue for, you know, Redditors spend like 12 hours a day on the internet, and the internet to them is sacred, right? It's like a sacred thing you don't go against. And that's what I think ultimately that was like for many people the straw that broke the camel's back, as they say. Because suddenly they're messing with something sacred. Then you got the other crowd who are like poor versus rich. You know, this is a matter of fundamental inequality. Then the boomer versus millennial crowd, they're like, this is wealth redistribution for us. Because let's be honest, most people on Reddit are like under 30, or it's Twitter or wherever. So it's not the boomers fundamentally or as a demographic majority on these sites, right? It's becoming all these narratives. And that's really driving the emotions, the passion behind this, what you would call a social movement, right?
Yeah, this is like a revolution of sorts. This is more giving back people the power that was lost in 2008. If you remember what happened in 2008, these hedge funds gambled away the American economy. What happened? Lehman Brothers got bankrupt because they gambled away our economy. And these shitheads got bailed out for doing stuff like this. If we were to do something like this, we get jailed. These guys just got a slap in the wrist, and maybe one or two guys got jailed. But otherwise, they got bailed out. Same thing happened in COVID. If you looked at COVID, the 1% made billions of dollars because of insider trading. And that's because people didn't know what was going on. It's like, how are these people getting wealthier when the economy is suffering? It's because these guys know how to play the market. But now you have more players coming in because the market's becoming mainstream. So stuff like this will not happen again. The 2008 crash, where also COVID, where the richest of the rich make millions of dollars, that's not going to happen again because everyone's going to keep a closer eye on the market from now on.
It'll be interesting to see how regulators kind of side with either the retail investors here, or they're gonna be siding with the other team, as in the hedge funds, and that's probably one of the main reasons to kind of get involved currently and see how this is gonna play out, because it's gonna put people's trust in government and kind of question that and see how that goes.
Yeah, that's like investigating Robinhood right now, right? So,
is that official?
I've pretty much seen it on every news site. So I don't know.
There is a class action lawsuit against them right now. Yes,
a few,
Right now, it looks like they are siding with us.
Yeah.
But, well, I want to see this out. I want to see how this kind of plays out.
Did you guys watch Cortez's Twitch
live stream?
Yeah.
I watched the first bit and then I had to eat dinner. There's so many tech issues at the beginning.
So, yeah, it was really bad. But there was one part that stuck out to me. While she was like graduating and getting into the world of politics, she did mention something about like the new guys getting into politics. They made this pledge where they're not gonna accept charity from like the elite of the elite. So I think because of that, the elite will have less influence in the future, because these younger politicians will not accept their charity or donation. And as generations change, TV is getting outdated. We're getting all our information from social media, so we will be able to see right through this. We will know who's been paid off and who isn't. Like all the bullshit, we will be able to see it now.
Yeah, and I think the flip side of it is the Wall Street Bets keeps bringing out is that even social media can play to both sides, and it's quite easy with bots and everything to spread misinformation, to move people in a particular direction and interest. There's a lot of conspiracies about how if the hedge funds are actually trying to manipulate these forums and what stuff. So you always have to contend with, keeping social media, I guess, a friendly and safe place, free from manipulation. So just wanted to point that flip side as well, because I'm sure you guys watch the documentaries that are coming out these days about social media and the social aspect of it, how that can also play into, I guess, negative trends and influences. Let's just to put it that way. So yeah, it cuts both ways, I think, just to provide a balanced perspective. But the movement itself, what's happening right now, I'm here for it personally, and I'd love to hear there are people skeptics and different opinions. But yeah, I think we are first row seats or front row seats thanks to internet, thanks to social media, to what on earth is going on and trying to make sense of it all.
Yeah, I need to buy popcorn for next week. I'm going to enjoy every moment of this.
Yeah, and it's I know a lot of people are glued to their screens, and they will be in the coming days for sure. On that note, I just want to ask one more question because there's been a fascinating discussion. You guys have, dabbled in this place called the stock market and now witnessed some of its shortcomings and fairness and how the system works and who benefits. Just for the individual, just for the small guys and gals, what do you think? What would you say are some key learnings that you learned from your own experience in the stock market? So just good financial practices or things they should be aware of and do. Just your, top takeaways from your own experiences.
Going off of what was just said before, I think for the majority of people, they've seen the stock markets as something that's inaccessible for the average person, and now because of the meme stocks and because of how much exposure it's gotten, a lot of people are learning more and getting more comfortable with it, which is good. But at the end of the day, I think it's still important, it was mentioned, know your fundamentals if you're gonna be riding this out for the long term and not just, investing one or two stocks in a meme stock or something you saw on the internet. At the end of the day, it's still important. Don't treat the market as something don't just see it as a class warfare kind of thing. See it for what it is. And there is still potential dangers of it, and there's still risks associated. So to still keep that in mind.
Definitely, I think that's good, especially in a time there's lots of passion and emotion for good reasons.
And don't let FOMO be the sole reason you invest. If you're okay with losing the money you're investing just to support this historical event or something like that, that's totally fine.
Yeah.
But always go in with the mindset that any stock you invest in could just go bankrupt or go to zero the next day. Not that it works.
Hey,
that's a really good mentality to have.
Just go in with the money that you're willing to lose.
Exactly, yeah.
That's all.
Yeah.
And have it, please have an exit strategy.
Hey, DFV said, what is an exit strategy?
Yes, but that's DFV. He made millions upon millions of dollars. Even if the stock goes down 40%, he's still coming out rich. He's just...
He did cash out a little bit too as well.
Yeah, that's fine.
14 million.
He had a couple million just sitting. So
yeah.
But, more power to him.
Yes, there's a term, I know Wall Street Bets historically didn't believe in it, called risk management. It's worth Googling if you're listening to this. But yeah, definitely put something away. If you see big gains, even your initial capital, you can take it away and let the profits ride, especially if you're up 500,000%, right? At that point, so you have what you initially went in with. I think that's always a good way to think about it.
Yeah, one of the best strategies to do is if you see that you made a lot of money, withdraw your initial investment, cash out the initial investment. And watch the rest of it grow.
Just ride.
Yeah, watch the rest of it grow.
Yeah, literally, unless it's like crypto and it's a 10-year, 20-year play, then, and you think it's going to be a multi-bagger.
You can make some quick trades with crypto. It's like crypto is one of those very volatile assets where one day it goes up 20% and the next day it goes down like 30%. I've seen people, like a couple of my friends, they do like cash out their crypto here and there because they're like, I don't want to like see this stuff drop. For me,
because it's definitely gut wrenching when you're, let's say you have 5,000 invested and then you made 10,000 and then the next day it's like you're at 2,000. That's
it's mentally
it's one thing. It's one thing to know about that risk, but then it's another thing to see those numbers in your bank account screen.
Yeah.
Also, if you want to see your money grow, diversify your assets as well. Don't just go into stocks. Don't just go into crypto. Search other ventures as well. There's precious metals, there's mutual funds, there's bonds. There's a lot of assets that you can tap into to earn you money. Of course, you have to you have to read into the situation. Bonds right now, for example, are terrible because the economy's struggling and your return is going to be very low. Metals, they do well when the market's struggling, for example. Crypto's the same. Just do your research, do your due diligence.
And just for the people who are super lazy and you're hearing these terms, it's like, yo, I can't learn about 5 different things, man. Who do you think you are? It's very easy today with technology. Saif mentioned, well, simple. They will do the diversification for you using artificial intelligence. And it's super easy to set up. All you got to do is add dollars and they do the diversification for you via their platform. On Wealthsimple Invest, there's many other AI robo-advisors as well. So if you're too lazy to DD, I think that's the best path.
With Wealthsimple, you also have that luxury of scaling how much risk you want to put in. So do take advantage of that.
The risk meter. And if you're young, I just literally telling a kid this last night, because this man is really young, younger than a lot of us here even, and he had his risk setting at 6, and he was wondering why his returns were so low. I'm like, that's a boomer numbers, setting your risk at 6. He said, noted, and hopefully he takes more risk and as well Simple Invest.
Take calculated risks. That's all I have to say.
Risk management.
One thing I just wanted to mention for learnings wise was I think this one's pretty evident or common knowledge at this point, but time in the market is generally better than timing the market over a long period of time. Definitely can't speak to the current events that's going on, but that's something I've kind of noticed from other people's advice in the stock market.
I've talked about this before, but you can waste your life just thinking about, now it's not the time, I'll wait it out, but the best time to invest is now, within reason, now. But that's a good point.
That's another good one.
It's amazing because you might think a stock or a market is at a low and it might never actually historically reach that low again. It's very fascinating, but the people who study market history will tell you that. And the other one is people get scared because at all-time high. I think they crunched the number. I don't know if this is 100% accurate, but about 70% of the time the market is at an all-time high. So so the fact that that's what makes timing so difficult in itself, right? And that's just an index. That's not even a volatile stock or something we're talking about here.
Yeah, but in the end, not everyone's going to be a day trader. This is not going to be like their full-time job. It's not going to be my full-time job. For me, it's like once this GameStop debacle's done, I'm going to just pick a couple of stocks, go AFK. I have no intention of doing this full-time. Honestly, just pick companies you like, research them. If you like them, invest in them. What's the worst that can happen?
That's good advice. I like that too.
Yeah. And I think WSB, for all those Reddit fans, I think they've evolved a lot, truthfully, over the years. Because if you guys saw these guys, the type of advice you're getting 3-4 years ago versus today, we never thought they would be on the diamond hands crowd and telling people to hold no matter what. That's all good stuff. They're becoming more, I guess, investors now than just
No,
gambling.
once this stuff wears down, they'll go back to their old ways. I promise you that. Like that's the one thing the hedge funds underestimated was just how tenacious normal people can be. Wall Street, they're like, oh, we never experienced loss before. If you look at Wall Street bets, they post loss for fun. They enjoy that stuff.
Yeah.
We laugh at their expense.
Right. Yeah, it is. It was the biggest meme on the internet, even when it was small. Like, I literally joined for the memes, and 2 years I stuck around for the memes. Like, no one, I wouldn't even look at the due diligence section. Like, I wouldn't read the full analysis because everyone thought these guys were memes, or this corner of the internet is all memes. Turns out, suddenly they are like on news headlines all over the world, and kaboom, that's where we're here today.
Yeah, sure. Most of them do eat crayons for breakfast, but at the same time, there are a couple of posts out there that are genuinely good. Read those from time to time. Just try to get like the general gist of it. That's what I did even before the GameStop thing. If I saw a quality post on Wall Street Bets, I would read into it a bit and be like, this is interesting. I might look the stock up. You can do that as well.
Yeah, definitely. But none of us, not even the mods, would have expected this type of reception and global reception already. And it will keep growing. And some of these guys are very tenacious. I'm seeing posts about GameStop becoming $1 trillion company apparently. So yeah, they like to think big, like their icon Elon Musk. But we shall see. I think that's the most we can say right now. And on that note, if there's no last comments, just want to thank you guys for making the time talking about stonks. It's been fun. Definitely dispelling what's going on and some of the things happening. Yeah.
Yep. Always a pleasure.
Thanks for having me, Tahmid.
All right, guys. Take care, and everybody else, make sure to follow @JoesYouth on IG, Just Our Stories on FB. We're on Discord and a whole other place, but you'll find that on our IG and FB and whatever. All right, episode will be up soon, and join us soon for the next episode. Take care, everyone.
Later.
Bye.
See ya.